Well, folks, do we have a lot to talk about and get into in this video here today? Oh my gosh, okay, so many stocks to talk about, so many things in the market going on. Obviously, CPI came out today. It's an enormous amount, so busy video. I hope you guys enjoyed it. As always, thanks for being here. Thanks for being subscribed. In a different position, I gotta sit down, man. I gotta sit down for this video because literally, I don't know what happened, but my heel is messed up. Like I could barely walk today. And it makes me think, right? In life, things kind of even it out, right? Great day for me in the market. Might have been up $100,000 today. Let's say you never could walk again for the rest of your life, but you made $100,000 a day every single day. You woke up, another 100,000. Next day, another 100,000, but you could never, ever walk again. Would you decide to take the money in that situation? $100,000 every day for the rest of your life, you can never walk again. Let me know. Love to hear from you guys. It's one of those like little crazy questions, okay? Alrighty guys, so first off, starting out here at the top, talking about Meta, right? Is my number one stock in obviously the public count. It's the biggest position. It's even a bigger position in the public count than Tesla. Tesla's a $300,000-ish position as well, but this eclipses it by a little bit in the public count, right? And a huge day here today. This stock was up almost $24,000 for us, up over 7% in regards to Meta. And the reason being is it is official now at this point in time. There were a lot of rumors about this, but now it's confirmed. Meta's going to lay off 10,000 more workers after the initial cuts it already did back in November. Meta CEO Mark Zuckerberg said Tuesday the company plans to cut 10,000 employees. The company laid off more than 11,000 employees in November. Zuckerberg has pitched 2023 as Meta's year of efficiency, and not just year of efficiency, but if you listen to the latest conference call from Meta, right? Zuckerberg's talking like this is just going to be a leaner, meaner company moving forward into many future years, not just like 2023 is like it. This is just like that's his vision for where Meta is going in the future, which means profits in pouring. The CEO previously told analysts Meta plans on cutting projects that aren't profitable or may no longer be crucial, while simultaneously removing layers of middle management to make decisions faster. It's a very important factor. It's not just about saving money. It's about when you add all these layers to a company, you can potentially slow down your company in a substantial way, add a bunch more bureaucracy to your company, and ultimately you could set yourself up to put yourself out of business in a much more quick amount of time. Here's the timeline you should expect. Over the next couple months, organization leaders will announce restructuring plans focused on flattening our organizations, this is Zuckerberg, canceling lower priority projects, and reducing our hiring rates, Zuckerberg said in a message to employees. Okay, reducing our hiring rates basically says, what that tells me right there, okay, if you want to know what that tells me that Zuckerberg and the team will only hire somebody if they are really the creme de la creme, coming out of their previous employer or coming out of college or something like that. Zuckerberg and the team got, I think, very desperate for workers for a while there, while they were growing at substantial rates, and I think they were just hiring, I don't want to say anybody, but they were let's call it lowering their standards, okay? And now they're obviously upping their standards in a substantial way. So ultimately it makes you a much better company, because you gotta understand, when you start bringing in some, let's call B players, or maybe even potentially C players, I doubt there's any D or F players that play at Meta, right? But let's say they, instead of all A players, they've got a bunch of B players and C players at Meta right now, right? Or at least have had that. Those bring down the A players. Like, A players don't want to be around B and C players. That's not fun for them, right? That's like taking an NBA player and saying, hey, you got to go play with a bunch of people from the park. Like, that's not fun for them. They want to play with other NBA players, right? He added that Facebook's parent plans to close 5,000 additional open roles that it hasn't filled yet. In a nod to continued economic uncertainty, Zuckerberg noted that the company should prepare for the possibility that this is a new economic reality will continue for many years. Okay, smart move on his part, smart commentary there, right? Because he can't come out and say, oh, this is only a short-term thing, and, because otherwise people are going to look at him as, like, heartless, and it's like, oh, just because the numbers are a little rough here in the short term, you're cutting us. No, he's got to kind of, whether he believes that or not, it remains to be seen, okay? But the bottom line is, when it comes to Zuckerberg, he's got to take that approach of like, this is going to last for years. This is why we're doing this, right? Because it makes it look like, oh, I can understand why he's doing that. It's not just because one quarterly numbers is bad or something like that, okay? So definitely a smart move by him there, right? Now, this obviously is going to change substantially 2024's EPS numbers for the company, right? I mean, if you look at what analysts were expecting, they were expecting 11.48 for 2024 EPS numbers. I don't think it's crazy to imagine this company does $14, $15 of EPS in 2024, especially as they get reels rolling in terms of the revenue opportunity over this next 12 to 18 months, and then you take off all these employees and all this cost. And you got to understand, when it comes to employees, there's a lot more costs that go into an employee other than just their salary. Like ask anybody that employs employees out there, okay, is an employer, and they're going to tell you, yeah, like the salary, what that person actually gets paid is just a small amount of the total cost. When you tack on health insurance, all the additional fees you have to pay. You might have to have managers that have to manage all those employees, right? I mean, the amount of direct and indirect costs that go into having an employee is sometimes 50% plus more than what their actual salary is. So if somebody's actually getting paid $100,000, the actual cost of that employee could be upwards of $150,000, if not much more substantial than that, okay? So nonetheless, I'm very thrilled with obviously Meta's decision, because this has to be made. Like, they were way bloated with employees. Zuckerberg, Sandberg, and the whole team, they added way too many people. It was completely unsustainable, and now they got a cut, man. And so this is likely their last big cut. I wouldn't be surprised if we see a small cut a little later on in the year from Meta, but I think this is their last really, really big cut. And then you always have a certain amount of employees leave as well, and do those roles get filled? It depends. They might just promote from within, as far as all that goes. So yeah, definitely in terms of that, still on the right track. Now you might say, is this stock still a buy, right? Because obviously it was a huge buy for me. Is it still a buy? My answer to that is absolutely. Absolutely, it's still a buy. You're looking at one of the best balance sheets in the world. You're looking at a company that's going to be focused on net income now rather than just revenues, right? You're looking at a company that's going to start scaling back up their revenues over this next few years. And you're looking at a Zuckerberg in the team that is possibly the most hungry they've been in a long, long time, right? After the whole stock debacle last year and seeing that company go all the way down to $100 a share and be kind of cast away from even big tech. It was an incredible move there, right? And so in my opinion, the stock is still stealing money. Is it as much as stealing money as it was when it was under $100, a few months ago? No. But is it still easy money over this next 3 to 5 years? Yeah, absolutely, okay, absolutely. And I don't think there's going to be any shortage of Wall Street money coming into this stock, because Wall Street loves what Zuckerberg's up to there. An efficient team that's going to move faster, potentially even innovate faster now. In my opinion, they probably will. Plus, you're going to have profits pouring in, cash flows pouring in, and guess what? They're going to be able to take all that money and potentially buy a bunch of shares back if they want, which don't be surprised if you see them buying huge amounts of shares back over this next, let's call it 12 to 24 months. So, nonetheless, folks, Meta, looking good, okay? Next up here, CPI. Then we got to talk about a ton more stocks and a ton more things going on in the market, and stocks that might be buying opportunities and all those sorts of things, okay? I saw this last night. This actually showed up on YouTube. I was surfing YouTube for a little bit, just kind of seeing what people were posting out there, and this just got shown up to me. And so I just, will CPI come in hot tomorrow? And I just voted no, right? Because I didn't think it would, but also I just wanted to see what the results were. And in those YouTube polls, you have to vote to see the results, right? And almost 3,000 people had voted, and it just goes to show you how much of a bad place kind of retail's in right now, just always expecting the worst, right? And it's such a shift in between what's going on right now versus what was going on 24 months ago. Because 24 months ago, all the retail investors, almost all of them, thought everything was going right, everything would go right. And now just look at it. There's just overwhelming amounts of retail just consistently think things are going to go wrong, and it just has to be bad. And I don't blame people, because when you've been slapped in the face for 18 months straight, you kind of think everything's just going to be bad, right? In terms of CPI, it rose 0.4% in February on a seasonally adjusted basis after increasing 0.5% in January, so a little tick down there. The U.S. Bureau of Labor Statistics report today, over the last 12 months, the all items increased 6% before seasonal adjustments, okay? Now, I'll take this, okay? I'll take this because I got to be honest, this was the one report I was a little worried about when it came to CPI. I'm not worried at all next month, where I'm very, very confident we're going to be, well into the fives. The month after, I think we're going to be in low fives or maybe even potentially high fours, okay? So this was the 1 month I was concerned about, and for the next at least 6 months, I have 0% concerns about inflation. And I think we're going to come in with some very impressive numbers, and I think we'll be in the threes, possibly even in late summertime, believe it or not. And so I'm definitely liking. Now, the most important factor of this is, okay, this is huge for everybody watching this to understand this. And if you missed this in CPI, I'm going to bring it to your attention right now because this matters in a substantial way, okay? The index for shelter was the largest contributor to the monthly all items increase, accounting for over 70% of the increase, okay? So basically, housing is what's screwing us right now. If it wasn't for housing, I'm telling you these numbers would be substantially less, okay? But I'm telling you, this housing problem is going to go away rapidly here, okay? I'll just show you some screenshots around Vegas. And go to your city, go to different cities around the United States of America, and you're going to see there are rentals popping up everywhere now at this point in time. And when there's rentals popping up all over the place, what's going to happen here is landlords are going to have to bring down price, or their properties are going to sit vacant and collect dust now at this point in time, okay? So, I mean, this is just parts of Vegas. I was just screenshotting, right? Just random parts of Vegas, my city, and it's just there's properties everywhere, right? And at the end of the day, if this person wants to try to, rent this for 2.4, they're gonna have to bring down their price to maybe 2.2, 2.1, 2,000, something like that. Because look at all these other properties they have to compete with, all in the same area. I mean, it's a lot of dang properties. Look at this. Look at this. Just properties everywhere for rent now in Vegas. Now at this point in time, when you have way too much supply and not enough demand, you have to bring down price. And all these landlords are basically eating all these costs. Every month that goes by and they're not renting a property, you're eating the cost of that. Month after month after month. And then sooner or later you get fed up and you say, damn it, I'm going to have to drop price or I'm not going to freaking be able to rent this thing, right? I mean, just look at it. All over the place, man. Look at all these rentals. It's everywhere. So what's going to end up happening is people are going to bring down price here, and obviously the whole shelter issue is going to go away in an epic way over this next 6 to 12 months, okay? If you look at Phoenix, right? I got a house in Phoenix. I was like, let me check out Phoenix. Oh my gosh, there's units everywhere. Phoenix, Glendale, Peoria, Scottsdale. It doesn't matter where you look. There's properties all over the place now at this point in time. And the supply is out there and it's immense, which means they're going to have to bring down price because the demand isn't there. And also keep in mind, there's a record amount of apartments being built right now that are all finishing up over this over 2023. So all those apartments the record amount of apartments being built in the United States of America that are all finishing up this year, oh my gosh, that's just going to add a ton more supply out there at a time period when demand's not that great. And so, which means, guess what? Rents are going to have to drop. Good luck raising rents. Because if you try to raise rents on your tenants, I'm telling you, over this next 6 to 12 months, your tenants are going somewhere else because, dude, they have a million opportunities out there, right? I looked at my old city I used to live in, Charlotte, North Carolina, right? Look at Charlotte, North Carolina. I mean, there's units all over the place now at this point in time. And this is a very different market than it was 12 or 24 months ago. Because I can tell you, rentals 12 to 24 months ago were hard to find, right? And you had to pay top dollar. And I'm just telling you, the market's completely shifting, and it's not done. It's not done. It's going to be a much better situation there, okay? So yeah, do keep that in mind, okay? Now, this was interesting because now basically they're talking about all deposits, doesn't matter the amount of money, are going to be basically safe now at this point in time, okay? Which is a big shift here. Now, Ken Griffin comes out and he says, this is U.S. capitalism. It's breaking down right before our eyes. That's what Ken Griffin says, right? The founder of Citadel. Interesting commentary from him here, okay? He says the U.S. is supposed to be a capitalist economy. Okay, Ken Griffin, what about when the banks were all getting built out? Are we really capitalists, right? What about in Rona when we were sloshing out stimulus money all over the place and we were bailing out every business in creation of mankind, right? We might be somewhat of a capitalist society, but I can tell you we have a lot of elements to us that have been socialist, and this really dates back all the way to the great financial crisis, in my opinion, in a pretty substantial way, right? And he even breaks down before that. Do you guys remember, some of you might be too young to remember this, I actually remember this, even though I wasn't an adult at this time, but I remember this was like, I think it was 2001, maybe 2002, and George Bush and everybody, they sent out stimulus checks because George Bush was like telling people to go out and spend money and whatnot. They had a very small recession, I believe, around kind of 01, 02, right? And I think it was like $300 they sent to everybody, or $400, and told them to go spend money and whatnot, and to stimulate the economy. And so nonetheless, I mean, we've had a little bit of a history that is not always showing the most capitalistic side, right? And that's breaking down before our eyes. Said in an interview on Monday, a day after U.S. regulator pledged to protect all depositors in SVB, and now talking about all in general, right? There's been a loss of financial discipline with the government bailing depositors in full. Yeah, but at the end of the day, you know, that's what goes on. You know what I mean? That's what goes on. That's the system we're living in now, and I don't look at it as that different than a system we were living in 3 years ago, or 5 years ago, or 10 years ago, or 15 years ago, or even 20 years ago. It's just the way it is nowadays. Okay, it is what it is, right? And I was kind of interested. I was like, let me see what Ken Griffin owns, because I was just interested to see if he had any big short positions on or something like that. And not really. It's actually funny. His top of his portfolio looks exactly like my top of the portfolio, which is hilarious, right? Look at the public count. Meta's my biggest position. Tesla's my second biggest position. And this is exactly what his is. That's funny, right? I don't have a position in Apple, although I'm not opposed to it. Adobe's a really good stock. Don't have a position in it. But anyways, and nonetheless, it looks like he's mostly pretty much long here. And so it just looks like he's disappointing kind of the whole system, capitalistic system and whatnot. But at the end of the day, man, this is no different than what's been going on over the years. Like, you know, wake up, smell the coffee type thing, right? VIX, what did I tell you guys yesterday? I said this baby's going to keep rolling down unless you get more bank runs or a hot CPI. We didn't have a hot CPI. And this baby's going to be going down rapidly now at this point in time, unless there's a bunch more fears about bank runs or something like that. But now with the government basically just saying, we're going to backstop everything, all depositors are whole, doesn't matter what financial institution you're at, pretty much. I mean, with that going on now, it's going to be, I think, very tough to get any more bank runs now at this point in time. And, you know, with CPI coming in, not being crazy, it's so crazy. You know, I woke up, right, and I said, I want to see these CPI numbers. So I went to CNBC app, right, because Lord knows, CNBC is going to always have CPI numbers up there. And I'm surfing CNBC app, looking for CPI. It's nowhere to be found. I'm like looking through all the news, everything. I'm like, where the heck are the CPI numbers? So then I go on the website, CNBC. I couldn't find them anywhere. I'm like surfing. I'm like, so finally I just Googled it, right, and pulled it up and looked at the numbers and whatnot. But it was just like, usually I'd just be able to pull it up on CNBC real quick. And it's always interesting that it wasn't even like top news. Like, I was just like, really, like not even top news? Like, it wasn't entertaining enough to be, like, on top news, right? That's just crazy to kind of think about that, right? But now at this point in time, VIX is in a tough spot because you know, earnings season's over basically now at this point in time, right? You know, 99% of companies already announced earnings. And so you don't have really much going on to really, you know, spike the market down huge and send the VIX up in a massive way, right? If we go ahead and we pull a big tech watch list here today, I mean, the more riskier type stocks of big tech really performed amazing, which is exactly what I called out a couple days ago. I said, you know, these are sorts of stocks, right? Which these are kind of seen as many of the riskier stocks, right? And look at the way they perform. Look at NVIDIA here today, Shopify, Uber, Tesla, AMD, Meta. And those stocks absolutely performed terrific today, and congrats to anybody that's shareholder. The short sellers have to be so mad. These people are losing a fortune. They keep trying to bet against NVIDIA again and again and again, put options, short positions, and they just can't get that stock to go down, man. I mean, short sellers, you give it up, okay? And especially in regards to these sorts of companies, like, it's not worth it, man. You lose your face on these, and you're blowing up your accounts because you hope NVIDIA is going to go down to 150, 125. If you're shorting based upon valuation, it's always a bad short, and that's what people are, you know, short these stocks about. And they lose time and time again and time again. And for every one, you know, lucky person that hits the jackpot and somehow shorts at the right time in one of these big dogs, right, and gets it right, I'm telling you, there's 9 losers in regards to this. It's like these are great long-term companies. You don't short these. If anything, and they go down huge, you buy the stocks, man. You buy them, you load up the filing cabinet. These are great companies for the long term. To try to short them is just it's a waste of time, energy, and resources. That's all it is. You know, people buy these put options on these stocks and they just lose time and time again. And like I said, for every one that wins, there's 9 that lose. It just doesn't make any sense, man. It's a failed strategy, and it's going to continue to be a failed strategy, okay? Commodities. I got to be honest, I love the action here today. On a green day like today, very, very green, WTI down big, over 4% downward move. WTI can't get out of its own way. It's like the market goes down, WTI goes down. Market goes up, WTI goes down, right? Natural gas down here today, coffee down, commodity index in general down almost 1.8% today. I love seeing that. These are all factors that will matter for inflation over this next 6 to 12 months. And the fact that commodities just continue to be in a weakened place is great news, okay? And I can tell you, the best thing ever for the economy would be if let's call it gas prices are substantially below where they were last summer. If we're 50 cents to $1.50 below per gallon this coming summer than we were last summer, that's you couldn't ask for a more perfect situation than that, okay? So let's hope, I'm not going to get my hopes up too much, okay? But let's hope that all plays out there, okay? No, I got to say, Rocket, not a stock I personally own, okay? But I got to say, this one's actually an interesting stock to potentially be a buyer of the next 6 months, okay? Here's the deal. Mortgage rates are more than likely going to start falling soon, okay? So which means anybody that bought a house over the past year or so, well, especially if these mortgage rates start falling in any substantial way over this next 6 months, they're going to start considering refinancing, okay? And the more mortgage rates go down, the more anybody that bought a house over the last 12 to 18 months is really going to consider refinancing, right? And Rocket's a huge beneficiary of that, okay? Also, when we get mortgage rates down more and more, which hopefully happens over this next 6 months, obviously mortgage demand is going to uptick, and we've had horrible mortgage demand for, worst in a long, long time here recently. And the reason being is mortgage rates has just been so dang expensive, okay? So a lot of things have been working against a company like Rocket in a substantial way that could actually start to help them over the next, let's call it 1 to 2 years, okay? And so this is just something to kind of keep an eye on. And I think it's an interesting stock to be a buyer of over this next 6 months, because there's really no buying activity in the stock right now, because a lot of people aren't even looking at it yet as a refinance play, as a mortgage demand uptick play. But I think it could be interesting. Am I going to buy Rocket? Probably not. I mean, there's too many other opportunities in the market for me personally, so I'm probably not going to add this stock. But I got to say, would I be surprised if in 18, 24 months from now, the stock's double the price? I wouldn't be surprised, to be quite honest, okay? So we'll see what happens there, but that's pretty interesting, right? I took a look at the old retail trader investor type stocks. I just want to see, especially on a big, green day like today, like what's going on with these stocks, and it's just very clear. They're dead money. I mean, just completely dead money. AMC was down 15% today. Bed Bath & Beyond was down 7%. Real was down 5%. The Ape thing was down 5% plus today. Those babies are just dead money. I hadn't really tracked them in a while, and I was just interested to see, are people still trying to play those, for the ultimate short squeeze or something like that? And it looks like people either ran out of money. Those people, I put them into the same group as the short sellers. They keep trying to, buy put options on Tesla and Nvidia and Shopify and all those stocks that have already gotten leveled. And it's like, dude, what are you doing? You're just literally wasting your money there. Come on, man. I understand it's sometimes seen as the easy way out, right? And I think that's what people want. I have to research companies. They have to look at their financial statements. I have to, listen on conference calls. That sounds like a lot of work. And it's like, you want the gains, you got to put in that work in life. That's the bottom line, man. You want the big money, you got to put in that work in life. There's no easy way to the riches. I'll just tell you that, man. I've been fortunate to, meet and know a lot of multimillionaires over the past, I would say, 3 to 5 years. And it's coming from a person that never knew anybody that was a millionaire, multimillionaire, and then getting to know so many over the past 3 to 5 years. I haven't met one yet that didn't work their face off to get there. It don't matter what. If you want to achieve financial success, it takes an immense amount of work. And so all these people trying to think that there's some easy way they can get to the riches. I'm going to cause a crazy short squeeze in AMC, or going to buy all these crazy put options on this and that in the short term to. I'm just it's not a viable strategy. It's not a viable strategy. You're not going to find some multimillionaire who did that. You're just not, because at the end of the day, that's a gambling mentality, and we know with gamblers, they go back to the casino time and time again. Okay, it's just not viable out there, right? I saw this today in regards to these airline stocks, and it makes me think. I think Wall Street knows something in regards to these airline stocks. Because if you look at these airline stocks, today was once again a very green day. And look at this. Love is almost at a multi-year low. The only time Love's been lower than this was in literally Rona when, basically the airlines were pretty much shut down. And that's the only time I could find that stock lower, right? And so I think Wall Street knows that there's a price war coming for the airlines. That's just my hunch. Because I'm watching the way these stocks are reacting price-wise, and it's the only thing that makes logical sense. I think Wall Street is smelling a price war coming between all these airlines. And if you're talking about, because it was kind of a perfect scenario for them coming out of Rona, right? It was just like demand kept going up and up and up. But now demand could definitely level off over this next few months. And when demand starts leveling off or potentially even goes down, you have a situation where price wars start in that sort of situation, right? When demand just keeps going up and up and up, all these airlines, right? They just keep raising price because and no one's fighting because there's like an unlimited amount of resources. But once things get tight, that's when price wars start. When price wars start for these guys, that's when their profitability starts to go, okay? So, like I said, it's just a hunch. I'm certainly no airline expert, I will say that. But I do know Wall Street, and I do know when Wall Street likely knows something. And I think they might be smelling a price war coming. We'll see. We'll see how it all plays out in regards to that, folks. Hope you enjoyed today's video. As always, thank you everybody that's joining me. As always, folks, thanks for being subscribed. Also, if you're ready to take stock market investing serious and learn directly from me and join us in the private stock group, the private wealth group, you want to apply to join us in there, check out the pinned comment down there. That will be to apply to join us in there. It's a phenomenal time to get in the market and take this stuff serious, man. You got to, I just telling people last year, you got to take a year like last year serious. Growth stocks were disgustingly undervalued, and look at how much those stocks have appreciated. Many of them are up 50%, 100%, some even 150%, right? This year, value stocks, dividend stocks, all over the place. You got to take advantage of these sorts of markets. When everybody's scared, panicky, when you see VIX spiking, when you're seeing things like bank runs, if you're not taking this stuff serious in a time period like this, you always look back in the future and just be regretting like, I should have taken it a little more serious, right? And so now's your time to shine, folks. Appreciate you. Much love as always, and have a great day.